Financial Minimalism, How to Get Rich by Spending Less, presented by Boundless Books Audio. Introduction. Welcome to Boundless Books Audio, where we bring you transformative ideas to improve your life. If you're looking for financial freedom, it's time to embrace a concept that many overlook: financial minimalism. In this audiobook, we'll explore how spending less can actually make you rich. Forget about get-rich-quick schemes. The real key to wealth is in how you manage what you already have. Let's dive in. Chapter 1: The Power of Financial Minimalism. In a world driven by consumerism, financial minimalism stands as a radical yet liberating philosophy, one that prioritizes wealth building over mindless spending. At its core, financial minimalism isn't about deprivation or living an austere life. It's about stripping away unnecessary expenses, eliminating financial clutter, and focusing only on what truly adds value to your life. Imagine a life where your money works for you rather than you constantly working for money. That's the essence of financial minimalism, leveraging simplicity to create wealth, security, and peace of mind. Unlike traditional financial advice that emphasizes earning more to afford a higher lifestyle, financial minimalism takes a different approach: control your spending, optimize your resources, and invest wisely. This mindset shift allows you to break free from the paycheck-to-paycheck cycle and build real financial independence. The biggest trap most people fall into is lifestyle inflation, the tendency to increase spending as income grows. The more they earn, the more they spend on bigger homes, luxury cars, expensive gadgets, and designer brands, believing these things equate to success. However, true financial success isn't measured by material possessions but by freedom, the freedom to make choices without money being the limiting factor. Financial minimalism empowers you to redirect your income toward assets that generate long-term wealth, instead of liabilities that drain it. Every unnecessary expense you cut, every debt you eliminate, and every dollar you invest wisely brings you one step closer to financial security. This is why many of the world's wealthiest individuals practice some form of financial minimalism. They understand that wealth isn't about spending recklessly but about managing money intelligently. Adopting financial minimalism requires a fundamental mindset shift. Instead of asking, "Can I afford this?" start asking, "Do I really need this, and does it align with my long-term goals?" This shift forces you to rethink your spending habits, prioritize needs over wants, and focus on long-term financial growth. Minimalist finance is about making conscious, intentional decisions with your money. It's about distinguishing between what adds real value to your life and what is merely a fleeting indulgence. Financial minimalism doesn't mean never enjoying life or making big purchases. It simply means making those purchases from a place of financial strength rather than impulse or pressure. At its heart, financial minimalism is about creating a life where money serves you, not controls you. It's about breaking free from societal expectations that tell you to equate wealth with excessive consumption. The less financial baggage you carry, the more flexibility you have to pursue what truly matters, whether that's investing in experiences, achieving early retirement, or starting a business. When you master financial minimalism, you unlock the secret to wealth. It's not about how much you earn but how much you keep and grow. By embracing this philosophy, you're not just saving money, you're building a financial foundation that will sustain you for a lifetime. Chapter 2: Why Traditional Wealth Building Advice Fails. For decades, financial experts have preached the same traditional wealth building advice: save 10% of your income, invest in a diversified portfolio, buy a home, avoid debt, and live below your means. While these strategies may offer some level of financial security, they often fall short in helping people achieve true wealth and financial freedom. The problem with conventional wisdom is that it assumes slow and steady progress is the only path to success, ignoring the realities of inflation, wealth inequality, and the rapidly changing economy. In today's world, the game of money is played differently, and following outdated advice can leave you stuck in the middle class, working for decades with little to show for it. One major flaw in traditional financial advice is the overemphasis on saving rather than earning. While saving is essential, it is a limited strategy. You can only cut expenses so much, but your earning potential is virtually limitless. Millionaires and billionaires don't build wealth by pinching pennies, they focus on increasing their income streams, investing aggressively, and leveraging opportunities that traditional advice often overlooks. The idea that skipping your daily coffee or living frugally will make you rich is misleading. Real wealth comes from building assets, not from deprivation. Instead of focusing solely on cutting back, the wealthy prioritize ways to multiply their money, through high-return investments, businesses, and strategic risk-taking. Another outdated piece of advice is the notion that homeownership is the ultimate investment. While owning a home can provide stability, it is not always the smartest financial decision. Many people are misled into believing that buying a house is the key to wealth, but in reality, a home is often a liability rather than an asset. Mortgage payments, property taxes, maintenance costs, and market fluctuations can turn a home into a financial burden rather than a wealth-building tool. The rich understand that true assets generate income, rental properties, stocks, businesses, and intellectual property, not just personal real estate that ties up capital without producing returns. Traditional advice also downplays the importance of financial education and adaptability. The economy is constantly evolving, and sticking to old-school methods without adapting to new opportunities can be a costly mistake. The rise of digital businesses, cryptocurrency, artificial intelligence, and passive income opportunities has reshaped how wealth is built. Those who rely solely on conventional investments like mutual funds and retirement accounts may find themselves outpaced by those who embrace modern financial strategies. The wealthy continuously educate themselves, seek mentors, and stay ahead of economic shifts, while many middle-class earners follow outdated rules that no longer apply. Finally, conventional wisdom fails to address the mindset and psychology of wealth. Success with money is not just about numbers, it's about how you think. The rich approach money with confidence, take calculated risks, and understand the power of leverage. Traditional advice often promotes a scarcity mindset, where people are taught to play it safe, avoid debt at all costs, and fear financial risk. But true financial freedom requires an abundance mindset, where money is viewed as a tool for growth rather than something to be hoarded. Those who break free from limiting beliefs and outdated strategies open themselves up to greater wealth, freedom, and success. Chapter 3: The Mindset Shift. Less is more. In a world that constantly screams for more money, more possessions, more success, it takes a radical shift in mindset to embrace the idea that less is actually more. Financial minimalism isn't about deprivation, it's about intentionality. It's about shifting your focus from accumulating wealth for the sake of status to using money as a tool for freedom, security, and true fulfillment. The real power of financial minimalism lies in understanding that by simplifying your life, you gain more control over your finances, your time, and ultimately, your happiness. Instead of chasing material possessions, you begin to value experiences, relationships, and personal growth. You move from a scarcity mindset, where more is never enough, to an abundance mindset, where you recognize that having fewer, well-chosen things can lead to a richer, more meaningful life. This shift starts with redefining success. Society has conditioned us to equate success with luxury, the big house, the expensive car, the designer wardrobe. But if you step back and ask yourself what truly brings you happiness, the answer is rarely more stuff. Instead, it's financial security, peace of mind, and the ability to spend your time how you want. This is where the power of minimalism meets financial wisdom. By cutting out unnecessary expenses, you create more space in your budget, space in your home, and space in your life for what truly matters. You stop working just to maintain an expensive lifestyle and start working towards financial freedom. A minimalistic financial mindset helps you escape the never-ending cycle of consumerism. Think about it. How much time and energy do people waste keeping up with trends? Maintaining things they don't need, or working extra hours just to afford a lifestyle that doesn't truly fulfill them? By choosing simplicity, you free yourself from this exhausting pattern. You become more mindful of your purchases, investing in quality over quantity. You learn to distinguish between needs and wants, realizing that happiness isn't found in the latest gadget or fashion trend, but in financial stability and the freedom to pursue your passions. The beauty of financial minimalism is that it's a personal journey. It doesn't mean you have to live like a monk or give up all luxuries. Instead, it's about intentional choices. It's about recognizing that every dollar spent is a trade-off, one step closer or further from financial independence. When you embrace this mindset, you start focusing on what truly adds value to your life. You might realize that having a smaller home means fewer maintenance costs and more money for travel. Owning fewer clothes means less stress and more time for important decisions. The shift to less is more isn't about sacrifice, it's about aligning your spending with your values. Ultimately, this mindset shift transforms your relationship with money. It empowers you to live on your own terms, rather than being controlled by financial obligations. You stop measuring success by what you own and start measuring it by the quality of your life. And in doing so, you unlock the true secret to wealth, not in accumulation, but in financial freedom, simplicity, and peace of mind. Chapter 4, Tracking Expenses, the Key to Awareness. One of the biggest reasons people struggle financially is that they don't know where their money is going. You might think you have a general idea: rent, groceries, bills, but until you track every dollar, you won't truly understand your spending habits. Tracking expenses is like turning on the lights in a dark room. It reveals the leaks in your budget, the unnecessary splurges, and the hidden costs that add up over time. Many people assume that budgeting alone is enough, but without tracking, a budget is just a theory. Imagine trying to lose weight without tracking what you eat or get fit without monitoring your workouts. Financial minimalism follows the same principle. You need to measure what you want to improve. Start by recording every expense, no matter how small. That coffee on the way to work, the subscription you forgot about, the impulse Amazon purchase, it all counts. You can use a simple notebook, a spreadsheet, or an expense tracking app. The key is to build awareness. At first, this might feel tedious, but over time, it becomes second nature. And the results are powerful. Once you see your spending patterns in black and white, you'll start making better financial decisions automatically. You might notice that eating out is costing you more than you realized, or that small daily expenses, like buying bottled water, are draining your wallet. These insights empower you to cut out waste without feeling deprived. Tracking expenses also helps you align your spending with your values. Most people don't intentionally waste money, but when they look at their expenses, they realize a lot of their spending isn't making them happier. Maybe you're paying for 5 streaming services but only use one. Maybe you're buying expensive clothes that you rarely wear. When you track expenses, you start questioning every purchase. Is this worth it? Does this add value to my life? Financial minimalism isn't about cutting everything, it's about cutting what doesn't serve you. When you eliminate unnecessary expenses, you free up money for what truly matters, whether that's saving, investing, or experiences that bring you joy. Another major benefit of tracking expenses is that it gives you control. Many people feel like they're living paycheck to paycheck without knowing why. They assume they don't earn enough, but often, the problem is untracked spending. When you start tracking, you take ownership of your finances. You no longer wonder where your money went, you know. This awareness allows you to create an intentional spending plan rather than letting money slip through your fingers. If you want to build wealth through financial minimalism, tracking expenses is non-negotiable. It's the foundation for cutting waste, increasing savings, and achieving financial freedom. Without it, you're guessing. With it, you're in control. Start today, and within a few months, you'll have a clear picture of your financial habits. That clarity is priceless. It's the first step toward building a life of financial security, peace of mind, and freedom from unnecessary spending. Chapter 5, The Art of Smart Budgeting. budgeting is often misunderstood. Many people see it as a restriction, a financial diet that takes the joy out of life. But smart budgeting isn't about deprivation, it's about control, clarity, and empowerment. It's the foundation of financial freedom, allowing you to make intentional choices with your money instead of wondering where it all went at the end of the month. Smart budgeting isn't just about cutting back, it's about making every dollar work for you. Aligning your spending with your values, and designing a lifestyle that prioritizes both security and fulfillment. The first step in smart budgeting is understanding your income and expenses. Too many people live paycheck to paycheck because they don't have a clear picture of how much money is coming in versus how much is going out. Start by tracking every expense for a month, from rent and groceries to that occasional coffee or streaming subscription. Once you see where your money is going, you can begin categorizing your spending into needs, wants, and savings. Essentials like housing, food, and transportation should always come first, followed by savings and investments. Luxuries come last, and only if they fit within the budget. One of the most effective budgeting strategies is the 50/30/20 rule. This method suggests allocating 50% of your income to necessities, 30% to discretionary spending, and 20% to savings and debt repayment. By following this simple yet powerful formula, you ensure that you're not just covering your expenses but also preparing for the future. However, budgeting isn't one size fits all. Some people might benefit from a more aggressive savings approach, such as the 70/20/10 rule, where 70% covers needs and wants, 20% goes toward savings, and 10% is reserved for giving or personal development. The real art of budgeting comes from making it sustainable. Many people create overly restrictive budgets that feel impossible to stick to. Instead of cutting everything enjoyable out of your life, focus on value-based spending. This means spending money on things that truly matter to you while cutting back on areas that don't. Love traveling? Allocate a portion of your budget to experiences rather than material possessions. Passionate about fitness? Invest in a gym membership rather than expensive dining out. When your budget reflects your priorities, it stops feeling like a sacrifice. Another crucial aspect of smart budgeting is automation. Set up automatic transfers to your savings and investment accounts the moment you receive your paycheck. This strategy, known as paying yourself first, ensures that you prioritize financial growth before discretionary spending kicks in. Additionally, leverage budgeting apps to track expenses effortlessly, helping you stay on course without constantly crunching numbers. Ultimately, smart budgeting isn't about being cheap, it's about being strategic. Every dollar has a job, whether it's funding your next big goal, growing your wealth, or providing peace of mind. When you master budgeting, you gain control over your financial future, reducing stress and creating opportunities for financial independence. The goal isn't just to save money, it's to build a life where money works for you, not the other way around. Chapter 6: Cutting out unnecessary expenses. One of the biggest financial traps people fall into is spending money on things they don't actually need. It's easy to justify small expenses, a daily coffee, a streaming subscription, or dining out a few times a week, because individually, they don't seem like much. But when you add them up, they could be the very reason you're struggling to save or invest. Cutting out unnecessary expenses is not about depriving yourself of enjoyment, it's about making intentional choices with your money so that it serves you in the long run. Every dollar you spend should have a purpose, whether it's for survival, growth, or meaningful enjoyment. Many people mistakenly believe that financial minimalism means living a boring or restrictive life, but in reality, it's about directing your money toward things that truly matter: experiences, investments, and financial security. The first step in cutting unnecessary expenses is identifying where your money is going. A simple way to do this is to track your spending for 30 days. Write down every dollar that leaves your bank account and categorize it: essentials like rent, groceries, and transportation versus non-essentials like entertainment, luxury items, and impulse purchases. Most people are shocked and they see how much they spend on things that don't add long-term value to their lives. Once you have a clear picture, start eliminating expenses that don't align with your financial goals. Cancel unused subscriptions, limit dining out, and find cheaper alternatives for the things you enjoy. For example, instead of spending $5 every day on a coffee shop latte, consider brewing your own coffee at home. Over a year, that single habit could save you over $1,500, money that could go toward an emergency fund, debt repayment, or investments. Another effective way to cut expenses is by distinguishing between needs and wants. A need is something essential for survival or well-being, like food, housing, and healthcare. A want is something that enhances your life but isn't necessary, like designer clothes, brand new gadgets, or frequent vacations. Many people blur the line between the two and convince themselves they need the latest smartphone upgrade or a luxury car when, in reality, a functional phone and a reliable vehicle would serve them just as well. By delaying gratification and practicing mindful spending, you develop financial discipline and set yourself up for long-term success. One of the best strategies to control spending is adopting a 24-hour rule for non-essential purchases. If you see something you want to buy, wait 24 hours before making the purchase. This simple habit reduces impulse spending and helps you determine whether you truly need the item. Often, you'll find that after a day of reflection, the desire to buy it fades. Additionally, look for ways to reduce recurring expenses. Call service providers to negotiate better rates on bills like internet, insurance, or phone plans. Many companies offer discounts if you ask. Small savings add up over time and free up more money for things that genuinely improve your quality of life. Cutting out unnecessary expenses isn't about making life miserable, it's about freeing yourself from financial stress and creating a future where your money works for you, not the other way around. Chapter 7, Minimalist Investing, Less Risk, More Reward. Investing doesn't have to be complicated. In fact, the more you simplify it, the more effective and stress-free it becomes. Minimalist investing is about cutting through the noise, focusing on essential strategies, and making smart, calculated moves that minimize risk while maximizing long-term gains. Too many investors chase the latest stock tips, attempt to time the market, or over-diversify to the point where their portfolios become unmanageable. This often leads to unnecessary stress, higher fees, and lower overall returns. The minimalist investor, on the other hand, follows a simple yet powerful philosophy: invest in broad market, low-cost index funds, maintain a long-term perspective, and avoid emotional decision-making. The power of compounding works in your favor when you invest consistently and let time do the heavy lifting. Instead of spreading your money across dozens of individual stocks, which can be risky and time-consuming, a well-diversified index fund, such as an S&P 500 ETF, provides instant exposure to hundreds of successful companies while keeping costs low. This approach reduces volatility and the emotional temptation to buy and sell based on short-term market fluctuations. Another key principle of minimalist investing is automating your investments. By setting up automatic contributions to your investment accounts, you remove the burden of making frequent decisions and ensure that you're consistently growing your wealth over time. This not only helps eliminate the risk of market timing but also instills discipline and consistency. Additionally, keeping a simple, low-maintenance portfolio prevents excessive trading, which often results in unnecessary fees and taxes. The minimalist investor also understands the importance of patience. The financial markets fluctuate daily, but wealth building is a long game. Rather than reacting to every market dip or surge, a minimalist investor stays the course, knowing that short-term volatility is irrelevant compared to long-term growth. This mindset helps protect against fear-driven sell-offs and greedy buying sprees, both of which can lead to devastating losses. Beyond just stock market investments, minimalist investing applies to other areas as well. Avoid overcomplicating real estate investments by sticking to simple, cash flow positive properties rather than speculative ventures. Keep your emergency fund and cash reserves in a high-yield savings account rather than risky alternatives. And most importantly, resist the temptation to chase trends like cryptocurrencies or high-risk penny stocks unless you truly understand them and can afford to lose that money. Minimalist investing is not about avoiding risk entirely, it's about taking calculated risks that align with your financial goals while keeping your strategy as simple and efficient as possible. The greatest investors in history, from Warren Buffett to Jack Bogle, have emphasized the importance of patience, low-cost investing, and a long-term outlook. If you focus on these core principles, you'll not only build wealth efficiently but also enjoy peace of mind, knowing that your investments are working for you without unnecessary stress. The less complicated your strategy, the more likely you are to succeed. In investing, as in life, less is often more. Chapter 8, The True Cost of Debt. Debt is often marketed as a tool for achieving financial freedom, but in reality, it can be a silent thief, robbing you of your future wealth. At first glance, debt seems like an easy way to access the things you want: a new car, a dream home, a college education. But what lenders don't emphasize is the long-term burden that comes with borrowing money. Every dollar borrowed comes with a cost, and that cost is measured not just in interest rates but in lost opportunities, financial stress, and the limitations it places on your life choices. The true cost of debt is far greater than the monthly payments. It's the years of financial servitude that can keep you from reaching real financial independence. One of the most deceptive aspects of debt is the way it compounds over time. Interest doesn't just add up, it multiplies. A credit card balance of $10,000 with a 20% interest rate, for instance, can balloon into a $20,000 debt if only minimum payments are made. That means you're paying double for the same purchase simply because you didn't have the cash up front. Even seemingly harmless loans, such as car payments or student loans, can quickly become a financial nightmare. The more you owe, the more of your income is dedicated to servicing that debt rather than building wealth. Instead of investing, saving, or starting a business, your money is being funneled into an endless cycle of repayments. Debt also creates an illusion of affordability. When you finance a lifestyle beyond your means, you may feel wealthier in the short term, but you're actually digging yourself into a financial hole. The more you rely on debt, the more you become dependent on a steady paycheck just to stay afloat. This dependence can limit your career choices, keeping you stuck in a job you dislike simply because you need to make the payments. It also makes you vulnerable to economic downturns. If you lose your job or face an emergency, debt payments don't stop, and they can quickly spiral out of control. Beyond the financial burden, debt also carries a psychological cost. The stress of owing money can take a toll on your mental and emotional well-being. Constantly worrying about payments, interest rates, and overdue bills can lead to anxiety, sleepless nights, and even strained relationships. Debt can make you feel trapped, limiting your ability to take risks, travel, or enjoy life without the looming pressure of repayment. True financial freedom isn't about having access to more credit, it's about having control over your money and your choices. The real cost of debt is not just the money you owe, but the opportunities you miss while repaying it. Instead of making banks and lenders richer, imagine what you could do if you had no debt. You could invest in assets, start a side hustle, or build an emergency fund. By understanding the true cost of debt and committing to a debt-free lifestyle, you can regain control of your financial future and create lasting wealth. Chapter 9, Living Below Your Means, The Wealth-Building Secret. One of the greatest secrets of building wealth is surprisingly simple: spend less than you earn. While this advice may sound obvious, very few people actually follow it. The modern world constantly tempts us with new gadgets, luxurious experiences, and an endless stream of products promising to improve our lives. Social media makes it worse, showcasing influencers and celebrities living extravagant lifestyles, leading many to believe that success is about spending more, not less. But the truth is, true financial security doesn't come from how much you make, it comes from how much you keep. Wealth isn't just about high earnings, it's about managing your money wisely. Living below your means is the cornerstone of financial freedom. It's not about deprivation but about making intentional choices that prioritize long-term stability over short-term gratification. Many self-made millionaires didn't achieve their status by splurging on luxury cars or designer brands in their early years. Instead, they practiced discipline, controlled their expenses, and made smart financial decisions that allowed their wealth to grow over time. When you consistently spend less than you earn, you free up money for investing, saving, and wealth accumulation. This strategy creates a financial buffer, protecting you from emergencies and economic downturns. More importantly, it allows your money to work for you. Every dollar you save and invest is a dollar that can grow through compound interest, building real financial power over the years. The key to living below your means isn't about cutting out all enjoyment from life, it's about understanding the difference between needs and wants. Needs are essential for survival and stability: housing, food, healthcare, and transportation. Wants, on the other hand, are the extras: designer clothes, expensive vacations, the latest technology. While there's nothing wrong with enjoying nice things, doing so at the expense of your future is a financial trap. The wealthy prioritize financial independence over impressing others. They understand that temporary sacrifices today lead to greater rewards tomorrow. Take Warren Buffett, for example. Despite being one of the richest men in the world, he still lives in the same modest house he purchased decades ago. He knows that true wealth isn't about flaunting riches, it's about financial security, peace of mind, and freedom. To master the art of living below your means, start by tracking your expenses. Awareness is the first step to financial control. Set a budget, cut unnecessary costs, and automate savings so that a portion of your income is always invested. Avoid lifestyle inflation, the tendency to spend more as you earn more. Instead, let your increasing income accelerate your financial growth, not your spending habits. Wealth isn't built by chasing an expensive lifestyle but by making smart, disciplined financial choices. By living below your means, you take control of your financial destiny and open the doors to true wealth and lasting success. Chapter 10: Building an Emergency Fund the Minimalist Way. In a world where financial stress is a constant burden, an emergency fund is not just a safety net, it's a necessity. Yet, many people struggle to build one because they believe it requires massive savings and sacrifices. But what if there was a smarter, more minimalist way to do it? A way that aligns with financial minimalism, where simplicity meets efficiency. Building an emergency fund the minimalist way doesn't mean living in deprivation, it means being intentional with every dollar you save and spend. It's about stripping away the unnecessary and focusing on what truly matters: financial security and peace of mind. The first step in minimalist emergency savings is determining exactly how much you need. Many financial gurus suggest saving 3 to 6 months' worth of living expenses, but the minimalist approach is to refine this number based on your actual necessities. If you strip away luxury expenses, like unnecessary subscriptions, frequent dining out, or impulse purchases, you might find that your true survival budget is significantly lower than your current spending. Instead of saving blindly, calculate the bare minimum you need to cover rent, utilities, food, and essential transportation. This allows you to set a realistic, achievable goal instead of feeling overwhelmed by an arbitrary amount. Once you have your target number, the next step is to automate your savings. Minimalists believe in reducing decision fatigue, and automation is a powerful way to do that. Set up an automatic transfer from your main account to a high-yield savings account every time you receive your paycheck. Start small, perhaps just $20 or $50 a week. The key is consistency. Even small deposits add up over time, and by automating the process, you remove the temptation to spend the money elsewhere. The minimalist principle of out of sight, out of mind works wonders in this context. Another essential aspect of minimalist saving is eliminating wasteful spending. Instead of focusing on earning more to save, shift your mindset to spending less on things that don't add value to your life. Do you really need the latest gadget, or can you make do with what you have? Can you cook more meals at home instead of ordering takeout? Minimalists embrace mindful spending, ensuring that every dollar has a purpose. Redirect the money you save from cutting unnecessary expenses straight into your emergency fund. Finally, remember that a minimalist emergency fund isn't about hoarding money out of fear, it's about creating a financial buffer that allows you to live with freedom and less stress. It's a tool that empowers you to handle unexpected expenses, whether it's a medical bill, a car repair, or an unexpected job loss, without going into debt. By building an emergency fund through minimalism, you are not just securing your financial future, you are cultivating a lifestyle of financial clarity and intentionality. Simplicity, after all, is the ultimate sophistication, especially when it comes to money. Chapter 11, The Minimalist Approach to Housing and Transportation. Minimalism isn't just about decluttering your closet or reducing your possessions. It extends to where you live and how you move. Housing and transportation are two of the biggest expenses in modern life, yet most people rarely question whether their current choices align with their true needs. A minimalist approach to these aspects of life isn't about deprivation, it's about intentionality, efficiency, and financial freedom. Let's start with housing. The modern idea of success often includes owning a large house filled with things, but a bigger space means higher mortgage payments, increased maintenance, and more cleaning. Instead of focusing on square footage, a minimalist mindset emphasizes functionality. Ask yourself, how much space do you actually need? Can you downsize without sacrificing comfort? Many people find that smaller homes or even alternative living arrangements, such as tiny homes, co-living spaces, or renting in walkable neighborhoods, free them from financial burdens and allow them to focus on experiences rather than possessions. Choosing a home based on necessity rather than status also means reduced utility costs, less environmental impact, and a lower mental load. Next, consider transportation. Many people view owning a car as a necessity, but the costs associated with vehicles, loan payments, insurance, fuel, maintenance, and depreciation, can drain thousands of dollars annually. A minimalist approach to transportation asks whether there are smarter alternatives. Public transit, biking, walking, and even car-sharing services can eliminate the need for vehicle ownership while cutting costs dramatically. If a car is necessary, opting for a reliable, fuel-efficient, or electric vehicle instead of a flashy, high-maintenance one can lead to significant savings. Location plays a crucial role in this equation. Living in a walkable city or close to work can reduce commute time, improve work-life balance, and lower transportation expenses. Many minimalists prioritize living in areas where daily needs, grocery stores, workplaces, and entertainment, are within walking or biking distance, eliminating reliance on cars altogether. This shift not only saves money but spending allows you to spend freely on what truly matters while ensuring that your financial future remains secure. Start by identifying your priorities. What truly brings you joy? Is it travel, dining at fine restaurants, or investing in personal growth through courses and books? Everyone's values are different, so your spending should reflect what you find most rewarding. The mistake many people make is mindlessly spending on things they don't really care about, expensive subscriptions they rarely use, impulsive shopping sprees, or dining out just because it's convenient. These habits drain your bank account without adding real value to your life. By eliminating unnecessary expenses, you free up money for things that actually enhance your happiness. A powerful strategy in conscious spending is the guilt-free spending fund. This is a specific portion of your income that is deliberately set aside for enjoyment. When you allocate money to fun and leisure in advance, you remove the guilt associated with spending because you know it's accounted for. For example, if you love traveling, set up a dedicated travel fund and contribute to it regularly. When the time comes to book a trip, you won't feel guilty or stressed because you planned for it. The same principle applies to hobbies, dining, or entertainment, anything that makes your life richer and more fulfilling. However, conscious spending doesn't mean ignoring financial responsibility. It's about striking a balance between enjoying the present and securing your future. That's why you should always prioritize your financial foundation first. This includes saving for emergencies, investing for long-term wealth, and paying off high-interest debt. A good rule of thumb is the 50/30/20 rule. Allocate 50% of your income to needs, housing, food, utilities, 30% to wants, travel, hobbies, entertainment, and 20% to savings and investments. This ensures that you're not sacrificing your future for temporary pleasures. True success is measured by financial security, freedom, and peace of mind. Learning to say no to unnecessary luxuries now allows you to say yes to bigger opportunities later. One of the most effective ways to resist lifestyle inflation is by defining what truly matters to you. Instead of mindlessly spending on status symbols, ask yourself if an expense adds real value to your life. Will that brand new car bring long-term happiness, or is it just a temporary thrill? Will dining at high-end restaurants every weekend make you feel fulfilled, or is it just an attempt to keep up with appearances? Often, the things we believe will make us happy only provide short-lived satisfaction. Real happiness comes from financial stability, meaningful experiences, and the ability to make choices without money being a constant source of stress. Another critical aspect of avoiding lifestyle inflation is surrounding yourself with the right influences. If your social circle constantly pressures you to spend more, it becomes harder to say no. The fear of missing out can be powerful, but true confidence comes from knowing that you are in control of your financial destiny. Being financially wise doesn't mean you can't enjoy life, it just means you're making smarter decisions about how you spend your money. Instead of upgrading your lifestyle every time your income increases, commit to saving or investing at least a portion of it. Over time, these small decisions compound into real wealth. Ultimately, saying no to lifestyle inflation is about discipline, self-awareness, and a clear vision for the future. It's about understanding that money should work for you, not the other way around. The ability to live below your means, even as your income rises, is one of the most powerful financial habits you can develop. It creates financial security, allows you to take risks, and gives you the freedom to walk away from anything that doesn't serve you. True success is measured by financial security, freedom, and peace of mind. Learning to say no to unnecessary luxuries now allows you to say yes to bigger opportunities later. One of the most effective ways to resist lifestyle inflation is by defining what truly matters to you. Instead of mindlessly spending on status symbols, ask yourself if an expense adds real value to your life. Will that brand new car bring long-term happiness, or is it just a temporary thrill? Will dining at high-end restaurants every weekend make you feel fulfilled, or is it just an attempt to keep up with appearances? Often, the things we believe will make us happy only provide short-lived satisfaction. Real happiness comes from financial stability, meaningful experiences, and the ability to make choices without money being a constant source of stress. Another critical aspect of avoiding lifestyle inflation is surrounding yourself with the right influences. If your social circle constantly pressures you to spend more, it becomes harder to say no. The fear of missing out can be powerful, but true confidence comes from knowing that you are in control of your financial destiny. Being financially wise doesn't mean you can't enjoy life, it just means you're making smarter decisions about how you spend your money. Instead of upgrading your lifestyle every time your income increases, commit to saving or investing at least a portion of it. Over time, these small decisions compound into real wealth. Ultimately, saying no to lifestyle inflation is about discipline, self-awareness, and a clear vision for the future. It's about understanding that money should work for you, not the other way around. The ability to live below your means, even as your income rises, is one of the most powerful financial habits you can develop. It creates financial security, allows you to take risks, and gives you the freedom to walk away from anything that doesn't serve you. True wealth isn't about how much you earn, it's about how much you keep and how wisely you use it. Chapter 14, Financial Freedom, the ultimate goal. Financial freedom is more than just a dream, it's the ultimate goal for anyone who wants to live life on their own terms. It's the point at which money is no longer a daily worry, where your income covers your lifestyle without you having to trade time for money. Imagine waking up every morning knowing that you don't have to work for a paycheck, but rather because you choose to. This level of financial independence isn't just for the ultra-rich, it's attainable for anyone willing to develop the right habits, make smart financial choices, and stay disciplined. The foundation of financial freedom starts with understanding what it truly means to you. For some, it may be retiring early and traveling the world. For others, it's the ability to pursue their passions without worrying about bills. Regardless of how you define it, the key to achieving financial freedom is learning how to control money, rather than letting money control you. The first step is to eliminate debt, as it's one of the biggest obstacles that keeps people trapped in a cycle of financial dependence. High-interest debts, such as credit cards and personal loans, drain your resources and prevent you from building wealth. By adopting a minimalist approach to spending, cutting unnecessary expenses, and aggressively paying off debts, you set yourself on the right path. Next comes the power of saving and investing. Saving money alone won't make you financially free, but it will provide the security needed to take bigger financial risks. A strong emergency fund ensures that unexpected expenses won't derail your progress. However, the real key to financial independence lies in investing. Building passive income streams, such as dividend-paying stocks, rental properties, or online businesses, creates a flow of income that continues to grow over time. The unnecessary and focuses on what truly matters. Now, it's time to put everything you've learned into action with a step-by-step minimalist financial roadmap that leads to lasting wealth and freedom. The first step is clarity. Before you can master financial minimalism, you need a crystal-clear understanding of where your money is going. Track every dollar for at least 30 days. Identify unnecessary expenses, hidden fees, and impulse purchases. Awareness is the first step toward change. Once you've done that, simplify your budget. Instead of complicated spreadsheets and countless categories, break your finances into 3 main areas: essentials, housing, food, transportation, wealth building, investments. Savings, debt repayment, and lifestyle, entertainment, travel, hobbies. The goal is to keep your lifestyle costs minimal while prioritizing wealth building. Next, embrace automation. Automate savings, investments, and bill payments so you never miss an opportunity to grow your wealth. Set up automatic transfers to a high-yield savings account or investment portfolio before you even see your paycheck. This removes the temptation to overspend and ensures you're always prioritizing your future self. Simultaneously, eliminate financial clutter by canceling unused subscriptions, reducing the number of bank accounts and credit cards you manage, and switching to a simple, low-cost investment strategy like index funds. The fewer financial decisions you have to make, the more mental energy you can dedicate to making smart choices. One of the most powerful minimalist financial moves is to redefine success. Society often equates wealth with luxury, big houses, expensive cars, designer clothes. But true financial freedom comes from needing less, not having more. Ask yourself, what do I truly value? What brings me happiness? Redirect your spending toward meaningful experiences and long-term goals instead of fleeting material possessions. This shift in perspective is what separates the wealthy from the debt-ridden consumer class. Finally, build resilience. Financial minimalism isn't just about spending less, it's about creating a life where money isn't a constant source of worry. An emergency fund, multiple streams of income, and a strong investment portfolio will give you the confidence to weather any financial storm. Start small if you have to, but stay consistent. Even $10 a week in an emergency fund can grow into a financial safety net over time. And as you continue this journey, remember, minimalism isn't deprivation, it's liberation. By stripping away the unnecessary, you create space for abundance in the areas that truly matter. This roadmap is your guide to financial peace and prosperity. Follow it, adapt it to your needs, and commit to a life of intentional financial choices. You don't need more money to be financially free, you just need to master how you use what you already have. That's the essence of financial minimalism. Thanks for listening to Boundless Books Audio, where knowledge fuels transformation. If you found this audiobook valuable, don't forget to like, share, and subscribe for more content that helps you unlock your potential.